Okay, everyone. Well, welcome. My name is Eric Grafstrom. I'm one of the co-founders here at ExitGuide. We run monthly webinars to help educate, small business owners on different aspects of selling their small business. Um, a couple of housekeeping things before I introduce our guest this month. We're going to keep this to 30 minutes, but one is you'll notice at the bottom of the Zoom application or your screen, you'll see a Q&A icon. You could submit questions there. We'll try to get them at the end. And if we don't, we certainly can follow up by email. There will be an on-demand version of this, and we'll send that out to participants after this webinar, most likely tomorrow. Some of you have not taken a free assessment. You can do that at exitguide.com. That'll give you an idea of what your business could be worth, as well as access to our preparation dashboard. And at the end, we'll share a promo code for 25% off coaching sessions and some of our other products for preparing and selling your business. So one, I'd just like to start by introducing Robyn. I've gotten to know Robyn, recently, and she is a business optimization expert. She works with Schooley Mitchell. Robyn, welcome. Why don't you share a little bit about yourself and your background, how you got into the space?
Yeah, thanks, Eric. First of all, thanks for having me here. Excited to do the webinar today. I was in corporate America for almost 25 years and decided I wanted to get out and do something on my own. And quite honestly, fell in love with the model at Schooley Mitchell. Helping businesses without any retainer or cost up front really spoke to me. So I've been doing it now for a little bit over 2 years.
Very good. Well, excited to have you share your wisdom with us, a couple of tips and insights. And we bring experts like Robyn onto these monthly webinars. These are tips and insights. This is not a full-on scope of work. So I just want to kind of note that up front. We brought on valuation experts, people who have that expertise in due diligence and other things. So keep in mind, this is intended to be helpful to you. Hopefully you come away with something that you can take action on. And those of you who've not completed the free assessment, or it's been a little while since you've been on the ExitGuide website, our goal is really to kind of, help small business owners worth less than $5 million go through a process of both preparing and managing the sale of their small business. Step one is what we're doing today. It's really educating you on various aspects of what that's like. So when you create an account at ExitGuide, you get an estimated value of what your business could be worth. It's very simple. You've given us some basic financial information. It's not a valuation, but it'll give you at least a ballpark of where you're starting. You'll get access to a dashboard that'll have content in it. It'll have videos in it. And you'll get invited to webinars like this to kind of learn more about the process. The next step is we help you prepare. Over 50% of deals die in due diligence, and some even before that. And largely, that's just a lack of preparation. People go into this just assuming that, putting a listing on a website or just kind of guessing at a sale price is, really the first step. And quite frankly, you're doing yourself a disservice if you don't really take the time to properly prepare both yourself and your business to engage a buyer, even if this is someone you know. I mean, it could be a family member, a business partner, but you still need to kind of make sure that you've got everything in place. And, again, more of that's in the dashboard. We have other resources for you. And eventually, when you're ready to close the transaction, ExitGuide is not a service that goes out and finds a buyer for you. Over 50% of the people that we work with, quite frankly, they come to us with a buyer and they say, look, I want to sell this to an employee or a business partner, but we don't know what to do. And so whether you find a buyer in your local community using some of our marketing tools, or you have a buyer in mind when you come to us, we'll help you get that transaction done by navigating the steps through due diligence and eventually closing the transaction by helping you structure the deal. So we help people, whether you're trying to find a buyer, whether you're getting an asset purchase or selling to an employee, various exits for different types of scenarios. So, really, we don't want to kind of limit you to the fact that, you're going to be out, using us just simply to go find that buyer. There's, again, a variety of ways to exit. And quite frankly, it might change as you go through this process. So, again, go to exitguide.com. If there's anything we can do, we'll provide some contact information at the end here. But that's just a kind of a snapshot of how we like to help our customers. So, let's start. I mean, everybody kind of comes into this. Okay, how do I increase the value of my business? And there's different ways of doing that. Today, we're going to focus more on reducing the costs. But what a buyer is looking at, generally speaking, when they're looking at acquiring a small business is, well, how much is cash am I going to be able to take out of the business? And that means different things. But largely, profitability is a component of that. Many small business owners do have very legitimate business expenses. They're known as discretionary expenses that they run through their business, such as a car lease or perhaps other items. So that gets kind of calculated into this. We're not going to get into the details of discretionary earnings on today's call, but we're going to largely talk around operating expenses and how they impact the valuation. So, how much the business generates in revenue, it's important. But what's also important is, well, how profitable is the business? What's the cash flow of that business? So, we're looking at when we do a kind of assessment for you, we're running a very basic seller's discretionary earnings calculation. If you need something more substantive, we do offer a valuation report, and that's using a market-based analysis. And again, these are methodologies that are used to measure the cash flow, the profitability, so that if someone is going to pay, let's just say $500,000 for a business, how long will it take for them to get their money back using proceeds from the business? So that's where that profitability factor comes into play. All right. So, Robyn's smart, has had a great career. Robyn, it sounds very formal. What is meant by business optimization? You're a business optimization specialist. Kind of what does that mean in plain speak?
Yep, great question. So what we do at Schooley Mitchell is optimize business expenses, the products and services that businesses pay for, by optimizing what they really need, matching a product or service to that, and then getting them the best possible price for that. So how do we kind of optimize that entire suite of business expenses that we look at?
Okay, so really it's kind of examining what they're doing today. Are you looking forward at anything about what they, are there expenses that they're not incurring today that maybe they should? And that sounds a little counterintuitive, but expenses that they should, look at making to further help optimize their business and actually spend money to save money, so to speak.
Absolutely, there could be, particularly on technology items. As
Mhm.
technology changes, sometimes it makes sense to bring different technologies together in one platform. And we look at all of that. That's part of our process of what we call client intake. Is not just who's your vendor for this now and what are you looking for? It's where are you going? Are you going to be merging?
Yeah,
Are you contracting? Are you moving buildings to a different location? All those come into play.
cool, cool. All right, so someone could, read an article online, they could attend this webinar. What's the difference between, I got a couple of tips, or I talked to a friend of mine who also owns a small business. What's the difference between doing it yourself versus, engaging someone like you to help with this process?
Great question, because I do get people who say, well, I'll just do it myself. There's three things that we have at Schooley Mitchell that the average business owner does not have, or the average executive team. One is time. We all know running a business
Yeah.
takes a lot of time. I don't know if I know anybody in small business that's fully staffed right now. The second thing is expertise. We have dedicated teams built around these different cost areas, and they're experts in their field. So we know, hey, this would be a great vendor for what you're looking for. And the third thing, and I think the biggest thing, is we have volume. The single business owner doesn't have volume. We've had 27,000 clients, documented savings of
Wow.
$600 million. So we can go to a vendor and exert some of that volume to get better pricing for our clients. For a client to call their vendor and say, hey, I'd like 26% reduction, I'm not sure that's going to be successful.
Do you have a limit in terms of size of business? Some of the people who we work with at ExitGuide, these are pretty small businesses. They may have, say less than $500,000 a year in annual revenue, and maybe half of that accounts is operating expenses. Is it worth it for them to take a look at some of these measures? Can they really have that type of impact on the business?
Yeah, I think definitely, I always will have a conversation with someone and be honest if they don't meet kind of some of our minimums. And our minimums are really put in place because you do need a certain minimum level of volume to drive those vendor discussions. But even if they don't meet that and they want to DIY it on their own, I can still give them some pointers on how to do it.
Cool. Well, let's talk a little bit more about some of that. You know, um, all right, somebody's sitting on this, like, all right, what do I do? Like, how do I start? Like, I'm thinking about this. I mean, ears tend to perk up when you talk about saving money and increasing valuation. So where does that somebody even start just to get their head around this?
It's really these three questions. What are your actual expenses? And not surprising, a lot of the clients I talk to, they don't know. They don't know who
Oh,
their vendor
wow. Okay.
or what their expenses are, because quite honestly, very often they've relied on someone else to do that work. And with turnover the way it is, it may have been that Tom negotiated that vendor contract, and that was 3 years ago, and Tom is gone now. So understanding what your actual expenses are, how much are you actually paying for those services, and then what do you really need? I think
Okay.
sometimes, even in our personal lives, we get oversold. Oh, have a great special, let's bundle these things together, and then you end up with expenses that you didn't anticipate.
Okay. All right. And, you know, you know, are there expenses that you see that you'd consider non-essential? And if so, like what are some examples of those? I mean, I think a lot of people run their business like myself. I mean, I've run businesses before and you've been doing it for a while, so everything seems like it's essential. But then when an objective third party with your type of background comes in, what are some of the things you see that like maybe you need it, maybe you don't, maybe think twice before you continue to run that expense through your business?
Sometimes it's the add-on things. It's people will see in the next slide that, beware of the bundle. So
Yeah.
we in our personal life, well, let's bundle these three, we'll throw these three services in for you with telecom, for instance, and come to find out you've never used them. I don't use those
Yeah.
services. Next thing you know, you're paying for them.
Got it. Got it. So let's talk about that. Yeah, I did get a little ahead of myself here on so, I asked you to do this and kind of break it down into a couple of three areas, and again, we're not doing a comprehensive analysis here, but what are some of the areas that you typically like to look at or start with when you're either qualifying somebody or maybe actually through an engagement?
Yeah, looking at your contract, everyone will have signed some type of agreement or contract. Really understanding what your options are. Do you have early termination fees? We always adjust our savings projections to take into account those fees. What is the length of your contract? Auto renewal. Auto renewal gets
Yeah,
people
that's a
all
big one.
yeah, personally again and professionally. Oh no, I think I'm good. And then you come to find out, well, no, you just auto renewed. And by the way, you auto renewed at a higher rate. That happens all the time. So, I tell people, put that in your calendar. You sign a 2-year contract, go in your calendar immediately and put that date in there so you see it coming. Because once the renewals hit, it could
Yeah.
be 8 hours later, it's too late. You've auto
Yeah.
renewed. Now you'll have an ETF on there. Insurance and warranties. Again, being sure you need those. If you have a bunch of cell phones that you're using, take a look at the value of that equipment. Should you be paying for insurance every month? And then what's the service level you're paying for? Sometimes with
Hmm.
different contracts, you're going to get different levels of follow-up and service. And if you're not getting those, that can be a reason to terminate a contract.
Yeah, and on the contract length and auto renewals, you mentioned put it on the calendar. Just another suggestion that I've used and I've heard from other business owners is, if the contract's set to renew on March 1st, for example, most calendars have a reminder. Set that
Mhm.
reminder, whether it's 30 or 45 days in advance, because sometimes that renewal date will be, say March 1st in this example, but they require a 30 or 45, sometimes 60-day advance notice. So if you call them on March 1st, it might be too late. It's good to
Mhm.
actually say, okay, get a reminder 45 days in advance, give you a day or two to think about it. You might get distracted, but then it gives you an opportunity to actually go in and say, okay, I do need to send them some type of notification. So early termination, I love that one because, it is something that people can get tripped up on with the auto renewals. Um, Invoices. I mean, uh, I've talked to a lot of business owners. My wife runs a small business. I mean, sometimes getting invoices out and on time and staying on top of them can just be a challenge, even though, yeah, it's bringing money in the door. So, what are some tips on invoices?
Well, now that you understand the contract you have with the vendor, it's really important to make sure that you're actually only paying for the things that you agreed to purchase. So what are your standard monthly charges? What are any extra fees that have all of a sudden come into play? And do you see billing errors? This is a part where a little bit can add up over time. where, I tell people when I've been at business conferences and I'll say, raise your hand if you fully understand your personal cell phone bill. Nobody raises their hand. We see charges
Yeah.
on there. We
Yeah.
don't quite know what they are, but they're only $1 or $2 here or there. Multiply that across different invoices and they start to add up. So really having someone take a look at these invoices to say, are we paying for what we contracted for?
And when you talk about billing errors, I mean, I'd like to think that in, the world of automation and everything's kind of, sitting up in the cloud, but do you see billing errors from when you look at customers?
Yeah, errors, and I would say errors too, as well as in, I don't want to use the word neglect. That sounds awful, but say
Yeah.
you're that has multiple telephone lines or cell phones, three people left, and you forgot to shut those lines.
Ah,
Been paying from. I had a client where they swear, I swear we shut those four phone lines down. We called the vendor and they said, no, we'd never done that. So they paid for double the phone lines they needed.
yeah. I mean, it's a trust but verify, right? I mean, you assume that somebody on the other side is got it handled, but notifications for terminating a contract or changes, it's not their job, quite frankly, to say, okay, well, no one's been using these three phone lines for the past 3 months. Maybe we should contact the customer. Especially when you're dealing with a large company, with, not to pick on Verizon, it's fine, a good company, but I'll use them because you mentioned phones. But they don't know, right? They're not measuring. It is in a system. And so, yeah, you got to take responsibility for making sure that those billing errors are not a result of, just simply no one paying attention on their side. All right, process. So, I'm looking at my expenses this afternoon after this webinar. I'm encouraged. Like, what are the things I should be thinking about and looking at?
Well, always getting three quotes. I think once you've looked at everything and you said, here's really what we need to run this business, go out and find three quotes if you can. And don't just pick the vendors that pop up when you Google search as the sponsored content. Like really dig down and find three.
Yeah.
Beware of those bundles. Again, they might sound great at that moment, like a shiny new car, and next thing you know, you've never used those added features. And one of the biggest ones that I see, quite honestly, are system integrations. Understanding how the different parts of your systems fit in. And the biggest one in that area is merchant services. I'll give you an example. Was working with a client who was in the pest control business. He needed a CRM so that he could run his business. He did not realize the CRM he chose locked him into a certain merchant service processor. As
Oh
his
my.
up and
Okay.
up and up, he came to me and said, can you help me? And we looked at his CRM and said, we can't. It's a closed architecture. We can't help you. And in fact, the only way you're going to get rid of or away from these rising credit card processing fees is to change CRMs. And by the way, they're not going to give you those credit card numbers. If you change CRMs, you have to go to every client you have and get their credit card number
Mm.
again. And he simply walked away and said, I don't have time to do that. I'll just keep paying the fees. So understanding when you're out there looking at things like CRMs and marketing tools, what do those integrations look like? Are you stuck with certain services that you're not going to be able to get out of?
Yeah. I mean, I've even had that experience in just to add to that, as somebody who's spent my entire career in technology, one of the things that I've learned is, as you're evaluating software, whether it's a CRM or maybe a email automation or other tools, it is important to look not just at what their capabilities are and the cost, but look at some of the integrations they have with third parties. And maybe it's an email system that you don't use, or maybe it's an accounting package that you already have your data in. And those are important, is just as important as utilizing the tool itself, because you may need to bring these things together to push invoices or take invoice payments and push it into your banking system. And what you don't want to do is get locked into something because, as you point out, Robyn, like it made sense that day for this one discrete thing, but now that I need to bring my banking data into my invoicing software, my invoicing software needs to be able to send emails to people to confirm payment. Those things do have to string together. And you don't want to be forced into accepting something or using something that just doesn't fit your needs. So, okay. But what else do you find that just being proactive and asking for discount works?
I think just being open to, look at things like your local chamber of commerce may have discounts, or
Mhm.
professional associations that you're involved in oftentimes will have discounts. So just asking the question, call your local chamber if you're a member. What kind of
Yeah.
discounts can a member get, and pursue those?
Yeah, and I've become a huge cheerleader. I'm based out of Austin and have been involved with the local chamber here. I imagine a lot of people who attend a webinar like this and been involved in small business are. If you're not, this is a plug for joining your local chamber. I mean, they're out there. They have so many tools and resources, and just the people that are involved tend to be great connectors. And we'll introduce you to someone like Robyn or someone else in your community who may be able to help with everything from bookkeeping and other services. So it's a great place to go. Uh, a couple of things before we get into some questions here. If on this webinar, you go back into your dashboard, you move through your assessment, we do offer a discount of 25% on basically on coaching, on our sell sheet, and on a valuation report. When you get to checkout, just enter founder 25, all caps, into the coupon code, and it'll give you some questions. Question came in, Robyn. Someone asked about the credit card processing fees. Can you explain a little more about that? Because that tends to be like, you might have gotten it plugged in as part of your website or through an email package. Like, I don't think a lot of us pay attention to those, and those can add up, can't they?
Absolutely. And they're so confusing, because the rates
Yeah.
vary based on what kind of card is used. Is it a travel rewards card, or a cashback card, or
Okay.
American Express, Visa, MasterCard? Then there's also how you take the credit card. Are you taking it in person? Someone is
Okay.
sliding, signing their name, or is it auto billing from, say, QuickBooks? Or are you taking the number over the phone? Each different level of transaction has a different level of security associated with it. And obviously, the less secure transaction, the more you're going to be charged to process that transaction. So there's literally like tables of like 700 different rates that are out there. So I think it's important to understand, look at that bill and say, how am I being charged? Am I being charged correctly? If you're mainly taking credit cards in person, make sure there's nothing on your invoices from the processing company that would involve transactions that aren't in person. Because again, you're going to be charged different rates. Um,
Okay.
it's a very, very confusing area. Also, making sure that you are PCI compliant. So there are some security questions.
Oh, okay.
Make PCI compliant. You should definitely be talking to your processor, making sure that you're PCI compliant. Because I've had businesses that weren't, and they were getting charged every month for not being compliant for something they didn't even know about.
Oh, really? Okay. Now, if someone is starting to take more orders online, it sounds to me like they should really be thinking about this in terms of allowing someone giving someone the option to pay upfront online versus on site when they're there with a terminal. You're saying there's actually a difference in fees as to, taking that payment, in person as opposed to through a web form?
Yes, yes. And
Okay.
auto paying versus someone else filling it online. Again, the different levels of security are what determine those different rates. So you definitely should look at your processing invoices and figure out how you're being charged, and making sure that matches how you're actually taking the payments. And quite honestly, thinking about, are there different ways for us to take the payment that might lower those processing costs?
Okay. And I'll take this next one. This one is more about just kind of making a one-time investment versus a recurring investment. So if you're investing in say like an equipment or a one-time, fee associated with somebody providing a one-off service, is that going to impact your valuation? The answer is probably not. When someone's looking and analyzing a business, they're looking at the business as it operates on a day in and day out basis. So, always talk to a CPA, or a tax expert about, where it applies in your particular situation. But if you're making a large investment, say in a refurbishment of a space or whatever it may be, it may not necessarily impact the value of the business per se, uh, or it may be amortized and scheduled in as an expense. So, there's nuances to that. Be sure to check. Again, different businesses have different needs. But really, when you're looking at cost reduction that Robyn's talking about here, we're looking at some of these recurring expenses and can't really emphasize enough the need to, and I don't know what your take is. This is kind of a question before I give my answer, but how often should someone really be examining, their expenses? Is it something they should do once a month? I mean, quarterly. I mean, there's a practicality measure here, but what do you recommend?
I think if you're DIYing it yourself, at least once a year, you and your entire
Okay.
team should really be getting together and making sure that everyone kind of understands the expense situation. If you're working with someone like myself, we actually run on a 3-year cycle, but we're actually monitoring those invoices for our clients.
Oh, wow. Okay.
Every quarter, they'll get a report of activity and savings every
Okay.
quarter.
Okay. So that's probably a little bit of a feel good on a bad day, is to know that maybe your day didn't turn out as you'd hope, but you saved a little bit of money when you get that report, I imagine.
Yeah, yeah, and it's just good to have someone else monitoring things as well, because
Yeah.
we monitor for things like volume. Say if
Okay.
you're shipping stuff out, our shipping expert can say, okay, you're now at a higher volume. It's time we go back and renegotiate again.
Because we don't always pay attention to those as business owners. We don't always think about the fact that, I've crossed a certain threshold. And I imagine that applies in a lot of different areas. So, I mean, shipping's a great example, but it probably applies in credit card processing fees and other things too, doesn't it?
Absolutely. And in areas like shipping, the other thing that's great about when we're monitoring invoices is, some businesses might pay extra to expedite shipping, but then it doesn't happen and they don't realize it, but they got charged for it. Our
Mm.
software is able to go back and say, you paid extra for expedited shipping, but the packages actually didn't get there in the time frame you paid for. We can go
Yeah.
back and partial refund.
Okay. Yeah, no, I mean, we're busy, right? You've got a business to run, you've got responsibilities outside of work. Yeah, no one's going to pay attention to it. It's great to know that you guys do that. Well, look, we're coming up on top of the half-hour mark here. If you have questions, you can always email me directly. It's eric@exitguide.com. Remember, once a month we bring experts like Robyn on to kind of talk about various aspects. If you're interested in learning more about how to engage Robyn, you can certainly email me. I'm happy to put you in touch and learn more about working with Schooley Mitchell and Robyn specifically to help reduce expenses. And again, look for our March webinar. We'll release a date on that relatively soon. But Robyn, any parting words of wisdom before we sign off here?
The only thing I can say, and I think you've made that point, is how important that other side of the equation is. I think when people are trying to increase the value of their business, we tend to think about, I'm
Yeah.
going to get more marketing support. I'm going to get another sales guy. I'm going to, increase that revenue. And we kind of forget that the other side of the equation, which involves no additional investment, is reducing your costs.
Yeah, and I can tell you, I mean, we look at thousands of small business owners that go through our platform, and you can keep your revenue flat, but if you can increase your profitability, your value will go up. It's absolutely true. It's how it's how the valuation works, because it means you're running your business more efficiently. So, Robyn, thanks again for your time. Greatly appreciate it. For those of you that have questions, again, feel free to reach out to me, eric@exitguide.com. Don't forget the discount code for Founder25. Robyn, thanks again. Greatly appreciate it.
Great. Thanks so much, Eric. Thanks for having me.
Take care.